In this video, I want to show you my stock screener settings that I use every morning scanning the market for opportunities. And as I like to over-engineer stuff and make it better, I programmed my own stock screener. I scan the market for different strategies every day to make sure I never miss out. So maybe you are also looking for stocks to buy and hold for a long term. Maybe you want stocks with high volatility before earnings, maybe looking for breakouts or shorts play. I promise you this will save tons of time, will create a better watch list, and doing this correctly consistently will make you a better investor. Let me say that the screener on Stocknear is free to use, but if you want to save your screeners and build more sophisticated strategies, become a pro member on Stocknear. Use the promo code screener to get 30% off on your annual subscription. I'll leave a link in the description below if you're interested in. I'm also not explaining in detail each and every setting since the video would be too long, but if you have specific questions about a preset, let me know in the comments and I'll try to answer it. The first strategy we are doing is to find stocks to buy and hold. These aren't stocks for short-term trades or day trading. These are trades we can be confident in and not sell. Most of the charts should look like this, where they have steady and consistent growth. I already included all the routes that we are interested in for the buy and hold strategy. The goal here isn't to chase quick gains. It's to identify resilient businesses that are worth holding over time. We focus on quality over hype, companies with healthy balance sheets, strong financial performance, and a solid technical position in the market. So the first thing we want to do is to look at current ratio above 1.5. So we also want the beta to be 1.5. This will make sure that we are looking for growth-oriented stocks that tend to move more than the market, cap over 300 million. The return on equity is set to be 15%. And we also want to set the simple moving average. The price should be above the simple moving average. The top analyst rating should either be buy or strong buy. We also set then the EPS growth in the next 3 years to be at 10%. Great. So we have a good starting point here. We have 9 companies that were filtered out based on our criteria here. Clicking on these tabs, you can find a quick snapshot of each company with certain metrics, such as the filters that we use right now, or the performance, such as in a quarter or a year ago, analyst rating, or the financial health of the company, such as the revenue, operating income, net income, free cash flow, or earnings per share. The next strategy we are looking for is earnings volatility. This strategy is built to capitalize on volatility around earnings reports, one of the most explosive and profitable periods for short-term traders. Earnings week often brings big price swings, and if you can identify high-quality companies heading into their reports, you can position yourself for outsized moves. The first thing we are doing is we're setting the earnings date for the next 7 days. Afterwards, we set again the market cap to above 1 billion. We set the top analyst rating to strong buy and buy, as well as return on equity to 20%. We set the earnings per share estimated growth to 10%, as well as the revenue estimated growth to 10%. So for now, we get 14 companies that will release their earnings in the next 7 days. The next strategy we are looking for is oversold bounce opportunities. Stocks that have dropped sharply often do it to market overreaction and are now showing signs of potential rebound. We're looking for charts where the price recently dipped hard, but this is now stabilizing or beginning to reverse. These setups are especially valuable for short-term trades because they tend to attract volatility, meaning stronger, faster price movements. The upside potential can be significant. A strong bounce can lead to quick profits, ideal for traders looking for momentum in oversold conditions. You can either enter immediately if the reverse is already underway, or add the stock to your watch list and wait for confirmation of the bounce. We are targeting liquid stocks. We want names that are easy to get in and out of it with enough daily volume to avoid slippage. So we set the average volume to 100,000. Next, we set the RSI below 40. The price should be above $5 to again avoid penny stocks. We set the relative volume to 100%. The stock must be green on the day, meaning it's already starting to bounce. This gives us a possible early entry on the recovery. So based on our criteria right now, we find 65 stocks, which is a little bit too much for me. So we set the relative volume to 200%. We get it down to 17 stocks, which each fulfill the criteria now for a nice bounce play. If you found this video helpful, leave a like and don't forget to subscribe for future content. Let me know in the comments your favorite screener and strategy, and I will see you in the next one.